for targets around 770.
Got it. All right, Mitesh, thanks a lot for giving us that call. Well, let's run you through the space that is under some pressure, and then we'll go across to Gurmeet Chadha to get his view on the cement stocks. Ultratech Cement, the numbers were in line. The problem is that realizations were soft, and the management outlook as well on realizations front wasn't very, very good. So that's why the stock is under pressure. And you have a couple of other names as well from the cement pack that are seeing some bit of seller. Let's run you through the management commentary then. They believe that cement prices will stay stable. They're not giving any concrete guidance in terms of price hikes to come about. The street, remember, would be working with price increases for FY24 in their EPS estimates as well as the EBITDA estimates. And the focus the Ultratech Cement management indicated was more on operating leverage as well as rather than price hikes. Now, demand, they say it's rock solid, and getting into election year, they are seeing no worries on that front. The blended cost, of fuel, they say the current prices are in that vicinity of around $175 per ton. Remember, for the past couple of quarters, that's Q2 and Q3, it's been around $200 per ton. So around $25 per ton softening could translate to around 150 rupees per ton of EBITDA saving. The overall cross trend, though, they're expecting it to remain elevated, particularly, for fly ash as well as for fuel, because China has reopened. There's no fresh petcoke capacity that's coming on stream. And point number 3 is the ongoing, Russia-Ukraine war will keep fuel prices elevated. That's the management guidance. Capex, more or less on expected lines, 6 to around 7,000 crores. The numbers were bang in line, and the beat came on the volumes front. The realizations were up by only around 0.5%. That compares to the expectation that it goes up by around 2%. Gurmeet Chadha of Complete Circle joins us. Gurmeet, well, Ultratech Cement, at the face of it, the numbers were fairly good, or they were bang in line. You can't say that these numbers were a miss at all. However, the realizations increasing by only around 0.5%, when demand is so strong, that's making the street a little bit nervous. The demand's strong, you're pushing through volumes, but what about pricing? Has the cement industry lost that pricing power? Your take on it. How do you approach the sector?
So Nigel, apparently you said it right. There was 12% volume growth, which means they've gained market share because industry volume growth was around 10%. They continue to work at 83% capacity, which means even the operating leverage is likely to play out well, is playing out well. I think what's happened is the mix. So if you see the volume growth, the mix of premium was just about 18-19%. Also within grey cement, the non-trade and trade. Trade is what your channel sales, and non-trade is where you do institutional sales. Typically, when you supply to institutional sales, the prices are lower, which eventually led to lower EBITDA. So I think it was the mix actually, and the point you made on the cost. So my sense is over maybe next few quarters, the cost should sequentially come down. That should aid realizations, and maybe they can come back to that 1,200, 1,100, which is where you see a sizable jump in earnings. And the stock trades at considerable premium. You are like 14, 15 times on your enterprise value. The scope for any disappointment in an environment where interest rate is up is quite less, and that's why you see the the reaction on the street. But in general, I think the first 6 months in the new year are typically good for cement sector, and the second half is when you have the monsoon and the winters, which are relatively weak. So overall constructive, but I think at this valuations, upside gets capped if the performance is average.
The street is truly betting on IT, and perhaps the worst is over. Look at the way the Nifty IT is reacting today. 1.7% up on the index for the year so far. It's a 5% up move. And even where there have been earnings misses like LTI Mindtree, top-down miss, revenues and margins lower than expectations, but the stock is now up 2.5%. So from the day's low, it's recovered close to about 6%. A couple of things that the company told us which may have fueled this optimism that maybe things are going to improve from here on. One, the management told us that in Q4, in the next quarter, we are going to see a 200 to 250 basis points margin improvement. Two, they also indicated that revenue growth in Q4 will be better than the revenue growth in Q3 based on the deal pipeline, the momentum, the deals that they've closed in the quarter gone by. And the third point is their 4 to 5 year vision in terms of the merger synergies. The company is targeting $1 billion of revenue synergies in the next 4 to 5 years and cost synergies to the tune of 200 basis points, which will play out over the next 4 years. So these are three factors which perhaps gives you an indication that Q3 has been bad. It's been hit by integration-related costs and furloughs, lower seasonal days, working days, but things are going to improve. And that's the, feeling that you have across the rest of the IT pack as well. So Emphasis had only 1 day of a decline, posted its Q3 numbers, and the miss on Friday it was down. Today it's up. L&T Tech as well. It hardly declined on Friday, and today as well you are seeing buying interest come through. Gurmeet,
Rima,
go ahead.
add to that, Mastech and Wipro. An IT analyst was pointing out, I mean, this is just his conjecture, that maybe IT companies have stopped reacting very negatively to bad results.
Yeah.
So, I mean, the price is right, and if that is true, it's too early, I think,
It's
to kind
too
of make
early,
a conclusion like that. But it's interesting that they're not sort of incrementally selling off in a very hard way, because it's a sector which is lost.
But I guess that's also telling you something about the mood of the market as well. IT having gone through what it's gone through in 2022, perhaps the market's willing to look ahead. And like you're saying, if on the horizon, once these issues of integration are behind, for a stock like LTI, Mindtree, perhaps, buying always happens ahead of the event, right?
Well, anyway,
buying or selling for that matter.
Nasdaq was up 2.5% on Friday. For the year so far, it's up close to about 6.5%. So that's also fueling the rally that we are seeing in Indian IT. But Gurmeet, thoughts on any of these mid-cap IT names? Any